History tends to divide the world into camps, us and them, winners and losers, those who fight and those who suffer. But there is one detail that people prefer to overlook in this picture. The wealthiest people in this story often belong to neither side. They belong only to the outcome. And sometimes this outcome seems almost absurd, because at some point it becomes clear that the same money can be used to finance both sides of the conflict at once. Those who were supposedly losing continue to profit. Those who are supposedly supporting the conflict are simultaneously undermining it. And the more chaos there is, the more stable their profits become. It sounds like a conspiracy theory, but the problem is that it isn't a theory. And if you look more closely, it becomes clear. This isn't a flaw in the system. This is the system itself. We usually imagine conflicts as a battle of ideas, politics, ideology, the ambitions of rulers, random mistakes leading to disasters. In this version, there are heroes, villains, tragedies, and resolutions. Everything is logical. Everything makes emotional sense. But there is another version, a much less comfortable one. In this context, war is not merely a clash of interests. It is also a market, a vast, unstable, risky, yet incredibly profitable market. And within this market, there are players for whom it doesn't really matter who wins. What matters to them is that the game continues. The first shift in understanding occurs when we stop thinking of wealth as a passive outcome. Wealth isn't just money sitting in a safe. It's a tool for influence, investment, and diversification. And this is where things get interesting. When the risk becomes too high, big investors don't put all their money on one side. They spread their bets. This is the basic logic of any investor. Don't put all your eggs in one basket. But what happens when the baskets are warring parties? The answer sounds cynical, but it's extremely simple. Money goes where there's movement, where there's demand, where there's a need. And war is the perfect storm of demand. Weapons, resources, loans, logistics, reconstruction, all of this requires funding. And if one side receives money while the other does not, the conflict ends too quickly, which means the market closes. But if both sides receive resources, the game continues. History is full of such cases, but they rarely come to light because they're inconvenient. They shatter the familiar moral framework. For example, banks and financial institutions that provided loans to countries on opposing sides of a conflict. Formally, this is simply business. In practice, it amounts to supporting both sides. Or industrial giants that sold technology, raw materials, or equipment, either directly or through intermediaries, to those who, within a few months, might turn out to be enemies of their own allies. This didn't always look like a deliberate betrayal. More often, it was a matter of cold calculation. If you don't sell it, someone else will. If you don't grant a loan, a competitor will. If you don't enter this market, you'll lose your position. And at some point, the line between economics and morality begins to blur. But the real turning point comes a little later, because it's not just that the elites were profiting on both sides. The point is that the very structure of the conflict sometimes became profitable. The longer the instability lasts, the more room for maneuver there is. Prices fluctuate, assets lose value, markets are crashing and can be bought at a discount. Governments become dependent on loans, politicians on support. Chaos becomes a resource. And this is where the most uncomfortable question arises. What if, for some players, losing is also a form of winning? Because a state's defeat does not necessarily mean defeat for those who financed its debts. On the contrary, a weakened state is easier to control. Its assets are easier to privatize. Its decisions are easier to steer. And then the picture becomes even stranger. The winner isn't the one who triumphs on the battlefield. The winner is the one who remains in the system after it's all over. Now imagine you're a major financial player. You have resources, connections, and influence. You're facing a conflict. The risk is enormous, but so is the potential for profit. What do you do? Do you bet everything on one side and pray for its victory? Or do you carefully balance your interests so that you come out ahead no matter the outcome? The answer is obvious, and it is precisely this that underlies many stories that appear chaotic on the surface, but are, at their core, cold, calculated strategy. But there is another layer. Sometimes elites don't just react to conflicts, they begin to influence their course. Not necessarily directly. Sometimes it's enough to maintain a certain balance, to prevent one side from winning too quickly, to keep the tension going, to prolong the process.
Because stability spells the end of profit, and instability is opportunity. And here we come to the most dangerous point. When the interest in profit begins to intersect with the interest in prolonging the conflict, the line between observer and participant disappears. The financier is no longer just an outside player. He becomes part of the mechanism. And the more such players there are, the harder it is to stop the process itself.
Because too many people become dependent on its continuation. And that's when a paradox arises that seems impossible at first. A conflict that is a tragedy for some becomes a source of income for others. Losses are reduced to numbers, destruction is turned into contracts, crises become opportunities. And the most disturbing thing is that this isn't a conspiracy in the classical sense. It isn't a secret club that controls the world from the shadows. It is logic, the cold, emotionless, almost mathematical logic of big money. When a system rewards those who know how to profit from instability, it inevitably creates players with a vested interest in maintaining it. And then the question is no longer about who is right or wrong. The question is about how the game itself is structured. Because if the rules are such that the winner is whoever stays above the conflict and profits from it, then perhaps we are being too naive about the very nature of these conflicts. And perhaps the most uncomfortable truth is that sometimes the enemies on the battlefield are not each other's main adversaries. The main adversaries are those who aren't fighting at all.